Glenianis.
Yes, and what do you think you're up to?
I'm just wondering when this desk's going to get tidied.
Well, I'll tell you what, you make Scruffy a coffee, as we all know Scruffy likes a coffee, and I'll consider cleaning the desk.
We've got half an hour.
Eh? Knackers. Get out of it. Go on, up the big chair. Do your job and let me do mine. That's how you get a coffee, guys. Intro. Hi and welcome to the channel. If you haven't been here before, my name is Langers, and as you might have just seen, I am the Scruffy Trader, as the voice of above has just shown. But anyway, what am I doing today? Well, today I want to talk about trading and show you a little bit about what trading is in the real world. Because I'm asked constantly, how do I make a wage from trading? I want to be a full-time trader. It is possible, but it's not as easy as you think. Because when you look on the land of make-believe, or what you guys would call Instagram, and even some of the other channels on YouTube, it's all made out to be so simple. It's no different than going to an ATM machine and drawing money out. It's not quite as simple as that. And I'll jump on a chart and I'll explain it a bit more. But basically, the way that I look at it, it's my job. It's what I do Monday to Friday, 7 o'clock in the morning to 5 o'clock at night. Just the same as you would in your job. And then I break it down. And I work out roughly what I need to do each day to achieve what I want as a salary. And your salary comes from position size rather than the amount of pips that you can win. Because I see it all the time. Oh, this is my P&L. I've just done this. And it looks like they're doing 500 pips a day. Trust me, Goldman Sachs can't do 500 pips a day. And they've got all the technology in the world. So what has you, as a retail trader, got any chance of doing it? You haven't. And it really winds me up when I see these posts and they'll be sitting there in a Ferrari going, oh, I've just paid for this cash. No, you haven't. What you've paid for in cash is a day's rental. And that is, it's just false. It really is false. So let's break it down and show it in real time on the charts with a good pair that you might pick. Now, personally, if you're just starting out, you'll only be trading 1 to 3 times in a day if you're day trading. If you're scalping, the way that it's portrayed is that you're in and out 5 ticks every other minute. It's nigh on impossible. Your concentration has to be almost perfect to brain surgery level, and you can't sustain it all day. But also the markets won't allow you to do it all day, and I'll show you. Anyway, so let's do a little bit of maths and we'll work it out, and then we'll look at a chart and we'll see how that applies to a chart. And hopefully at the end of the video, it'll kind of make some sense in real terms. So let's do a little bit of math. So here we are. This is just a quick way of breaking down money into a manageable situation that you can then sort of think to yourself, this is possible. Now let's just assume you want to make £10,000 per year or $10,000, wherever you happen to be, just because that's a nice round figure. You know, 10,000 goes a long way to help. So we've got £10,000, okay, or $10,000. And we're going to assume this across 1 year. And across the year, we're going to also assume that you have a couple of weeks off, Christmas or a week away, something like that. So it's based on 50 weeks. And then out of those 50 weeks, we're going to assume that you're looking at the charts Monday to Friday. So that's 5 days. So £10,000 across 50 weeks on a 5-day week. So it breaks down to £200 a week. And if you do that consistently per week, at the end of the year, you'll have £10,000. Okay? And then when you break that down even further, it's £40 per day. So now we've defined into bite-sized chunks a nice, easy figure to work with, which is £40 a day. Doesn't sound a lot, and it's not, but it's amazing how quickly it adds up. So the next part of the puzzle is how do we get that £40? So the first part we'll look at is the ATR. And the ATR I'm going to use today is from the euro dollar. And the reason I use the euro dollar is it's the biggest. Everybody knows it, and it's readily available to see the information, and I'll show you that on the chart in just a second. And its average move at the moment on a full ATR is 60. Okay, so put the 60 in. But the chances of you catching the exact bottom and top is pretty slim. So I use a rule of 3 in pretty much everything I do, and I do in trading as well. So if I divide that by 3, that gives me a realistic target as to roughly what I'm going to get in a move. So you put that in, and it's 20. So 60 divided by 3 equals 20. So now 20 doesn't sound that bad. For some people, it's a bit of a stretch, but it's not an unrealistic target to be aiming for. But this is the bit where everyone gets excited about, because they always want the money. That's all I ever hear. You know, oh, how do I get the money? And they seem to think that they can turn 10p into a million. It don't work like that, you know, and you've got to show a little bit of discipline and a little bit of thought, and that's the idea of this. Well, let's just say you're on £1 a point or $1 a point. You know, it's not a lot. Again, it's in the reams of possibility. So it's £1, and there you are. To get your £40 a day, you need to catch 2 trades, 20 points per trade, and that'll give you your 40 quid. And then your £40 gives you £200 a week, and your £200 a week across 50 weeks gives you 10,000 a year. And it's as simple as that. That's the maths. And if you boil it down to that basic premise, you've got a foundation to work on, because now you know you're looking for 2 trades, and each one of those trades wants to be 20 pips each. Now, you might catch a trade that's 30 pips. Result, you're ahead of the game. But when you do the next one, look for 20 again. And if it comes in at 21 or 22, brilliant. And if it comes in at 18, you've got a little bit in the bag. And that's where letting your winner's run come into it. But you need minimum parameters to work with. And that's what this is giving you. It's giving you a framework to work around. So now we know this. So what we're going to do now, I'm going to pull up euro dollar, and we'll have a look at it. And I'll use it around this week. I mean, it's the 4th of March today, just because I like it to be current. And I'll then show you how I break up the chart as well. If you break it into bite-sized chunks, it becomes a little bit clearer. So come on, we'll jump on the chart and I'll show you. But as I'm jumping onto the chart, help me to help you by clicking that little subscribe button. And if you like this sort of content, hit a like and ask as many comments below. And I'll answer everyone personally, and I'll try and answer them in plain speak, because trading ain't that complicated really. So come on, let's jump onto the chart and we'll find out. Okay, so as I said, we'll have a look at euro dollar. So here we are. So the ATR at the moment is 60 to 65. And if you scroll it back, it's roughly around there all the time, near enough, 50 to 60. So I wasn't a million miles away with 60 as a thought. So 20 pips is in the reams of possibility. Okay. So what we're going to do, we'll have a look at yesterday as a full day to give you an example of what I'm trying to explain. Today is the 4th of March. So we'll do a full day on the 3rd. Now, my chart of choice when I'm looking is a 15-minute. It's quick enough to see movements, but it's slow enough to give you time to compose yourself and have a look at what's going on. So how do we do it? All right, so if I go back, and remember, I keep saying it's a job, and it is a job. So we'll draw a line at 7 o'clock in the morning. So where's 7 o'clock? There's 7 o'clock there. So that candle. And we're going to finish at 5 o'clock in the afternoon, which is that candle there. And then what we'll also do is we'll box out the low and the high. So that square is an entire working day. And it's based on my time frame. So I'm in the UK. So that box would be the London session, starting at 7 in the morning and ending at 5 o'clock at night. So when we're looking at it, the premise is long, because if you look at the euro dollar over the last few weeks, it is long. Now, I'm not going to go too much into strategies today, because this is just giving you an idea of how to break a chart into bite-sized chunks in order to make a wage. Okay, so straight away, looking at this, I'd have seen two major moves in the day that were long. So again, it goes back to what I was saying earlier on. You only get 2 or 3 opportunities a day, and that's all you need. So the next question is, all right then, Scruff, you've got 2 moves. How do I catch them? Well, I like Bollinger Band, so we'll put a Bollinger Band on. And that is confirming the 2 moves that I said I'd be looking to take. And it'll be there and there. And I know you'll be scratching your head going, oh, okay, Scruff, how do you work that one out? Well, the way the Bollinger Band works is you're looking for a pierce of the band. So they're here. You can see it. And then a close inside of the Bollinger Band. And I will be taking this one. And again, you'll be scratching your head going, what? Well, there's 2 other candles there, Scruff. You're right, there is. But the reason why they wouldn't be taken is, there's your pierce. So your game is on. It's kind of closed back inside the band. Your entry will be a tick above it. But the next candle closed outside. So that negates that trade. This one closed outside. This one closed inside. So again, a tick above. But it didn't make it there, and that one closed outside, so that negates that trade as well. And then you wait, that one closed outside, this one closed on the inside, tick above that one, and away it goes. And if you remember, we're looking for 15 to 20 ticks. Okay, so we'll put a little measuring tool on, up there, to the high point is, well, about 22 ticks, give or take. Okay, but you're getting your 20. Which is what we are looking at in this purpose. So you're happy, that trade's over, complete. Waiting for your next day trade. Nothing's happening. Your premise is still long, so that doesn't apply. Pierced it here, that is your next candle, because it's come back into the Bollinger Band. So same process again. Do you get your 20 ticks and then some? You actually got 98. Now that was a news event yesterday which caused the excessive spike. But the principle is the same, okay? You took it down, even if that news event didn't come into place. It was at 13 ticks before the event came in. So for it to get to there is not really a stretch, because it's just rattling the tops of these candles. And there weren't that many moves to be seen. Okay, guys, that was a quick and easy way to break down a chart and also break down a large number. And if you look at that large number, 10,000 in this instant, break it to a week, then break it to a day, suddenly this huge mountain doesn't seem that high. And you've got a manageable bite-sized chunk to work. And once you've got that little bite-sized chunk, you can apply that to the chart and break your chart into a working day. So you know what time you start, you know what time you finish, and you treat it as a job. Because that's the number one question I'm asked. How do I make day trading my job? Well, the first step is to treat it as a job. So I start at 7 in the morning, as I would if I go into the office, and I finish at 5 o'clock, as I would when I leave the office. And then you have to be productive throughout the day. But just because you're not clicking a mouse doesn't mean you're not productive. Because what you can be doing, you know what your setup is, so you're waiting for it. But you can also be reading the news, so you're mindful of what could happen and change throughout the day. You're also looking at other charts and understanding the way they form, just as you would in a job, if you're a planner in an office. But even if you are a baker, you need to write a list out for your ingredients. You need to store those ingredients. Then you need to be able to make the cake, and then you have to put it in the oven. Now, the customer only ever sees the part where it comes out the oven. They don't see all of the preparation that came to making that cake, because that's what the baker's job is. And as a trader, you're doing the same thing. You have to be prepared. So your preparation is knowing what I want, break it into a manageable chunk, understand the waves of the market, and see if those waves correspond to the trade you want to make. I.e., if you were looking for £40 a day and you're only on £1 a point, you know, as I've just shown you on the euro dollar, you need 2 trades. So throughout your entire working day, you're looking for 2 trades. And each one of those trades wants to be at least 20 pips to get you to your 40. Now, you can't impose your will on the market. And I'm not saying they're always going to give you 20 pips, because they won't. But you've got a framework that was realistic. So the principle is the same. The only part anybody would ever remember is when you win that trade. But you forget about the preparation prior. You've got to know what you were doing. And part of knowing what you were doing is understanding your strategy and understanding the market you're working within, which is why you're best off being a specialist. Don't try and trade all 101 different markets. Just understand what you're doing and you'll succeed a lot better. Anyway, I hope that helps. And if it does, click the little subscribe button, because that helps me. And remember, guys, do what you love, and the money will follow. I'll see you in the next one, guys.